to Navigation Trading Live. You are now part of a growing group of do-it-yourself traders who are trying to change the way investors think about building wealth. But because we don't believe in using financial advisors, stock tips, or traditional financial media, we have to do things different. We have to do things smarter. We do that through an art and a science we call trade hacking. At Navigation Trading, our methodology is based on statistics and probabilities, not hype or emotion. Our core strategies have been used by market makers, hedge funds, and floor traders for many years. Now, we share these secrets with you. Whether your goal is to make an extra $1,000 per month or replace your current income, with our guidance, you can achieve financial success beyond your wildest dreams. So, let's get started. Good morning, Navigation Traders. Today's Monday, November 13th. Hope everybody had a great weekend. Looking forward to another great week of trading. Got a little bit of volatility in the markets, which provides opportunity for the way that we trade. So really excited about this week. Don't forget, this Navigation Trading Live broadcast is all about you. We broadcast every Monday morning at 8:25 Central, just before the markets open. If you have any suggestions on topics or questions or anything that you want us to dive a little bit deeper on, let us know. Shoot us an email or drop a comment here on Facebook or YouTube, and we'll do our best to answer those live here. So one quick announcement before we jump onto the platform. Don't forget, we've got our newest course that we just released last week, How to Trade Options on Futures for Max Leverage. This is all about trading options on futures. So if you trade options, one thing that you probably had an epiphany at one point and thought, man, how did I ever trade stocks without options? Right? If you remember back to when you first started trading, you realize the leverage that you get with options and the different capabilities with the time decay and the theta and the delta neutral, not having to pick market direction. Well, I think if you take this course on trading options on futures, you may have the same epiphany. And the reason I say that is because the value that you get from trading options on some of these underlying symbols is so much better than trading on stocks and ETFs in a lot of cases. You know, there's certain symbols like natural gas and oil and soybeans and wheat and corn that you can't really trade those on an underlying symbol, so you really can only trade those on a futures contract. And so if you trade options at all, which obviously if you're watching this you probably do, make sure you check out this course. It's we put a lot of work on this. Actually been working on this for about a year. We've had a lot of requests for this over the last couple years. So finally got it out. If you go to navigationtrading.com/futures, as you can see, like we always do with our courses, we send it out to our members, and you can get it at early bird pricing right now for only $49. Now that only lasts till Wednesday, so you've got about 2 days and 15 hours left before that early bird pricing goes away. So even if you don't have permission to trade futures yet, this is something you may want to lock in this course price, because after Wednesday, price is going to go up to our normal regularly priced courses. So this is the page, navigationtrading.com/futures, gives you everything that your course includes, which part of that is a options on futures cheat sheet. So this is a PDF download, and we've already got a lot of feedback from our members saying that this is an excellent addition to the course. They print it off, keep it by their desk. It shows a ton of great information, from the multipliers of the different futures to some of the nuances as far as when the futures are open, the time frames. We talk about all the keys to trading options on futures, from how to use less buying power and create larger returns. I created a video that I shot out last week giving you an example of trading the ES futures versus the SPY ETF, and the huge advantage that you get, almost 10-to-1 advantage you get on a leverage basis by using the futures on the exact same trade. we'll teach you all about the different future symbols, which ones to trade on and which ones to avoid. We'll simplify everything. I know there's a lot of mystery around futures. You know, how are they different from stocks and ETFs? What do I need to be aware of? All of that stuff is covered in the course. So again, navigationtrading.com/futures if you want to check that out. And again, after Wednesday, it's going to go to our normal priced courses. So check that out if you're interested. All right, it is 8:30, so you heard the opening bell just ring. Let's go to the platform and see what's going on. So we've got, this is the S&P 500. We have, you know, on Thursday and Friday, we had 2 down days in a row, which feels like forever since we've had that, right? I mean, look at this huge rally. We've had a couple little times, but it dipped here, now it's dipping here. So the question is, does this continue on its rampage to the upside? Does it turn around and rip higher to new highs? Or are we actually going to get a little bit of follow through to the downside? One thing to consider is, I mean, look at just these couple of down days and look at what implied volatility is doing. You know, so that signifies that there is a little bit of edginess. There's a little bit of uncertainty in the market where you just have a couple little down days like this and implied volatility shoots higher. That tells me that there's a little bit of nervousness in the market right now. So, you know, that doesn't mean the market's going to crash. That doesn't mean anything. I mean, the market could absolutely turn around and rip higher like it's continued to do over the last, you know, all the way back to August here in the short term, and in long term, even further back. So that's kind of the thought process there. I think if I had to guess, if I had to predict what's going to happen, I think we're going to see a little bit more downside. But maybe that's also just hopeful thinking, since a lot of our positions could use a little bit of downside in the market. So let's see what's going on here. We've got all stocks all down about 1/4 to 1/2%. Russell's leading the way down about 0.5%. You can see bonds are popping higher a little bit, up about 1/4%. If we look at TLT, you've got a nice increase in implied volatility in bonds as well. Oil, pretty flat, but starting to see a little pick up in oil there as well. Late last week, we put on an oil position in one of the oil-related ETFs. We've got gold. You can see implied volatility is going down in gold, contracting in gold. Pretty range bound, not a lot of movement there. We can take a look at nat gas, which has been a decent trading vehicle for us. If we look at UNG, which is the corresponding ETF, you can see the implied volatility nice and high there. All the grains down a little bit, wheat down quite a bit, over 1.5%. Some of the international indices, FXI, which is the China large cap, you know, it's continued to stay on a huge rally. We've got a little pop up in implied volatility just today. Euro's pretty flat. EEM, which is the emerging markets ETF, you can see we've got the implied volatility spiked up in that again. EFA, the MSCI, it's kind of the international index, getting a spike in volatility there. EWZ, which is Brazil. XBI down 1%. These are the biotechs. XLK, which is technology, that runs pretty close to the NASDAQ. XRT, which is retail, which has not been following in the same trend as a lot of other stocks, which has been nice from a diversification standpoint. And then some of these oil-related ETFs are also down quite a bit. Currency's pretty flat. Let's take a look at some of the big stocks out there. That's nat gas. That doesn't need to be on there. Apple down a little bit. Adobe down a little bit. Autodesk up about 0.5%. Amazon pretty flat. AVGO down. Baidu down almost 2%. Chipotle continues its slide to the downside, down about 2.5%. Nobody's eating burritos these days, I guess. eBay down 1%. Just trying to get a quick overview of if there's any big movers out there. Momo up 1.5%. Qualcomm up over 1.5%. And Everything else relatively flat. So what I want to do today for our trade of the week is I want to, we've got in our portfolio for the Navigation Alert subscribers, we've got a lot of different equity positions on. We've got some positions on in IWM, the Qs, we've got some individual stocks. So I don't want to get too overweighted in equities. I don't want to overload the boat in stocks in case we start getting a big move in one direction or the other. So what I do want to do is put on a position, and then we've got some other positions on in some of the grains and nat gas, oil related. But what we don't have on at the time is a position in bonds. So if we look at TLT, what you'll see is the implied volatility percentiles at 40. Okay, so it's not at that above that 50 level that we typically like to see it at when we sell premium, but based on the fact it's at 40, we've had a nice spike up the last couple of days. We could use a position on in bonds to kind of help diversify that portfolio. Don't want to add any more in stocks, so TLT or the bonds is a good vehicle to choose. So what we can do is we can look at TLT. So let's go through this and take a look at our options. So we want to look at that 30 to 60 days. So we've got one here, 32 days to expiration. And we can look at selling a strangle. We can look at selling an iron condor. In this case, let's just test an iron condor. I didn't set this up beforehand because I wanted to see where implied volatility came out on the open. But if we sell an iron condor, and then on TLT, I like to do about 3 strikes wide. So let's say 131 on the call side. On the put side, we've got the 16 delta or the 23. I always like to opt for the one closer to price or the higher delta. In this case, that'd be the 122 put. So we could put on the 122 and buy the one 3 points lower for protection, which would be the 119. And so let's take a look at this on our Analyze tab. So as you can see here, we're collecting a credit of 54 cents, or we've got a max profit of $54, and we've got a max risk of 246. I don't like the risk reward there, right? We're not getting enough credit to warrant the amount of risk that we're taking on this trade. So in this case, what I would look to do, and so this is, so you could take off the wings and you'd collect more credit, so you could do a strangle in TLT. But if I'm going to do that, I'm probably going to opt to go to the notes or the bonds, which are the futures, so we get a little bit more leverage. And in this case, to stay a little bit smaller, in case we want to add additional positions on, I want to look at the notes. So let's do the same thing in the notes. And let's see here. So let's go to 39 days to expiration. And let's go ahead and look at the delta here. So we've got an 18 delta or 27. Now 27's quite a bit higher. So let's see what we can get on the 18 if we sell an iron condor. And then we can go a couple strikes lower. Let's just test the 128 in this case. And then on the put side, let's go to we've got the 15 or the 24, so let's go to 24, which is the 123 half. And then let's go to lower, so that'd be the 121 half. We're getting, and remember in the notes and the bonds, those are fractions, so that's 20/30 seconds is what that 20 ticks represents. So let's analyze that, take that piece off, and looks like we're kind of in the same story. So we've got a max profit of $312, but our max risk is over $1,600. Okay, so that just doesn't make sense. And so I'm walking you through this so you can kind of understand the thought process, because I get the question all the time, why do you choose a strangle over an iron condor or over a butterfly or anything else? And a lot of it just has to do with the risk reward that you're getting at the time you put it on. And in this case, let's take a look. Let's go back to the trade tab and let's take a look at what if we did a strangle. So let's just do the 18 delta call and we'll sell a strangle. And then on this side, we'll look at the 123.5 on the put side. Now we're getting 24 ticks. And so let's click off our iron condor. Take a look here. And so now we're just clicked on the strangle. And let's set our price slices to break even to get an idea of our probabilities. It's 12.23. And it didn't quite set it for us. Let's do it again. Break even, 12.23. There we go. So a little over 68% probability. So that's good. We've got a max profit of 375, so it increases our profit potential. And it's undefined. So if you do not want to trade undefined risk, then you could buy the wings for the iron condor, but I just don't personally like the risk reward of that. I would rather go undefined and then be able to manage this trade if price does break out of our break-even points. And so that's my preference. So this is one that I will put on, and as soon as I get filled, assuming I get filled, I will shoot this out to alert subscribers. If you haven't tried out Navigation Alerts, you can go to the website and just click on the 2-week trial button. And we're still running the 2-week trial special for just $7. So if you want to check that out, do that at the website. Otherwise, everyone have a great week of trading, and we'll talk to you next week.